Okay, I'm not sure if you all heard the news, but the Black Friday sale has been extended through today. So you can get the same great crypto at discounted prices. Hey, what's up, folks? This is Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. In today's video, it's not about the Black Friday sale until the end, where it actually comes into play in today's video, which is going to be on Uniswap. This will be a 2021 review and price prediction from now until the end of the year. I'm going to be getting into the nuts and bolts of Uniswap, where I think it might go, what it's got going for it, what it's got going against it. There's a few things there that not everyone's aware of, so we're going to be talking about that in today's video and see where I think it may shake out by the end of the year. All right? So, as always, if you're a first-time viewer, make sure to hit the subscribe button, click the bell to turn on notifications, and if you enjoy today's video, make sure to hit the like button, and with that, let's get it going. All right, so we're going to kick off today's video with a little background first, that Uniswap was founded by Hayden Adams. Now, what is Uniswap and what makes it different? Well, unlike centralized exchanges like Binance or Coinbase, Uniswap is a decentralized cryptocurrency exchange which facilitates automated transactions between tokens on the Ethereum blockchain using smart contracts. Now, Uniswap uses liquidity pools rather than serving as a market maker. So what this means is the way this works is users provide liquidity by adding a pair of tokens to a smart contract which can be bought and sold by other users. Liquidity providers are then paid a percentage of the trading fees earned for the pair. So if you go to uniswap.org, you can, number one, swap. So in this section, you can connect a wallet and trade tokens, or pool, and in the pool area you can either create a pair or add liquidity. So liquidity providers earn a 3% fee on all trades proportional to their share of the pool. Now, fees are added to the pool in real time and can be claimed when you withdraw your liquidity. Now, common liquidity tokens include Ethereum, Wrapped Ethereum, DAI, USDC, USDT, and Wrapped Bitcoin. Now, any changes to Uniswap are first voted on by owners of Uni tokens and implemented by a team of developers. And as of October 2020, Uniswap was the largest decentralized exchange, or DEX, and the fourth largest by trading volume. Now, that may be changing, okay? So how many coins are there? Well, first of all, there are 1 billion minted coins at Genesis available for the next 4 years. Now, after year 4, there will be a 2% inflation rate per year. Now, you can see by the following liquidity chart that liquidity has increased drastically from June of 2020 to now, with continued pullbacks, but a steady rise nonetheless. If you then look at the volume chart, volume continues to rise as well. Now, per Uniswap, the Uniswap protocol empowers developers, liquidity providers, and traders to participate in a financial marketplace that is open and accessible to all. Uniswap claims 83 billion in all-time volume, 72,000 liquidity providers, 29 million all-time trades, and 200 plus DeFi integrations. Now, Uniswap, the Uni token, is currently ranked number 13 with a market cap of 6.4 billion and a 24-hour trading volume of 2.5 billion. It's trading around roughly $23 as of the recording of this video. And though the max supply for the first 4 years is 1 billion, only a little over 300 million tokens are currently in circulation. Now, as you can see by the release schedule, they've already released the first 2 years worth of tokens. Year 3 will add another 86 million, followed by year 4 with 43 million, then 2% a year after that. So what this means is that Uniswap is inflationary. It's not deflationary like Bitcoin, it is inflationary. Now, believe it or not, Uniswap did an airdrop for users of the platform before the Uni coin went live in 2020, where they were giving users 400 Uni tokens. Now that's quite a gift, because at its peak, that would have been worth over $10,000 depending on the day. Nice gift, right? Now, according to DeFi Pulse, Uniswap is currently bringing home the silver at number 2 for DEXs behind Curve Finance. As you can see here by the chart, Uniswap had nearly $4.4 billion in total value locked USD before the recent Black Friday sale of yesterday and today, which currently has it near $3.5 billion. Now, a wrinkle here is the rise of the Binance Smart Chain and PancakeSwap, a DEX on the BSC, which already passed Uniswap in wallets at 47.47 million versus Uniswap's 43.7 million. So the BSC is compatible, for those who don't know, with applications designed for Ethereum, but boasts significantly lower fees, which explains the growing user base. The BNB token is powering the BSC liquidity pools, which explain its rise. Okay, and now remember, I just did a video on the BNB token, so now you can kind of see why it's going up so fast. So, what's my price prediction of Uniswap at the end of 2021? Well, this is the meat and potatoes of the video, so this is the part you've been waiting for, right? So, since the beginning of the year, it went from roughly $5.18 to right around $23 today, or a 4.5x in 2 months. So with 10 months left in the year, if it maintained the same rate of growth, that would be a 22x. Now, I don't really think that's possible, and here's why. So number one, the gas fees on the Ethereum blockchain, or fees per transaction, for those of you who don't know what a gas fee is, it's a fee per transaction, make it ridiculously expensive to move Ethereum in minor transactions. So because Ethereum is based on proof of work and the fees go up with network traffic, the high price of Ethereum lately has been a killer for the functionality of the network, right? Which is also what's causing this latest dip with the fees prompting liquidations. So it really makes you wonder if a high-priced Ethereum is even sustainable, right? This current crash is proof that probably not. So remember that, everyone out there who's hodling Ethereum, is that I don't even know if Ethereum can continue to go up in the current way that it's built, because the more it goes up, the more it's not going to work. And then eventually the whole thing's going to crash, which is what's happening right now. All right. So I also don't think the growth can be maintained because of the rise of the Binance Smart Chain, as we already discussed. Binance is killing it. Smart Chain's doing amazing. They got some competition, right? Now, they're also going to be adding 129 million coins over the next 2 years. So we know that's coming up too. So just another thing in your back pocket. But where there is hope is if, number one, Ethereum 2.0 ever comes out. Now, bear in mind that, Dr. Wood was frustrated this when he was at Ethereum because he thought they would have been working on this in 2016, 5 years ago. Coinbase sent an email out just the other day telling people that you'll be able to stake your Ethereum 2.0 in 2 to 3 years when it comes out. When it comes out, if it comes out, it's still to be determined, right? Or the other thing here is if Uni moved to another more efficient blockchain. So at some point, a business decision will need to be made. Either stick it out with Ethereum or go elsewhere to greener pastures. They're going to have to do that at some point, all right? Unless they come up with another fix to try and fix the gas fee issue, which maybe they could, but that's the dilemma they're faced with, right? So half the rate of growth would be roughly an 11x, putting Uniswap around $253 per token by the end of the year. A quarter of the rate of growth would put it at 130. So if you look at it like 5 to 11x, that's kind of my prediction, is I think somewhere between 130 and 253 is where it could land by the end of the year. If it goes above 253, that would be absolutely amazing. But I wonder how far it can actually go being stunted by the Ethereum gas fees. Now, somebody had made a comment on this in one of my videos. I think it might have been the one related to Aave, one of them that I did there, if Aave's growth could be stunted. And a lot of these on the Ethereum blockchain, I gotta say yes, it could be, right? It's a huge problem. And the higher Ethereum goes up in value, the more Ethereum as a ecosystem doesn't work. So that's a problem. You know, when they built this thing, I don't know if they fully thought that through or if they never thought it would be trading anywhere at where it's at today. But it's really kind of shooting themselves in the foot. So if the gas fees weren't stunning the growth, I think it could go higher. But the problem is also then magnified with the recent successes of the Binance Smart Chain. So that's kind of where I think this one may fall, folks. Somewhere between a 5 and 11x would be absolutely awesome. Between 130 to 250, if it is anywhere in there, if it made it there, great, that would be awesome. I don't know, it may not even make it that high with these gas fees. So they've got to find a solution. They've got to do something here, whether they're sticking with Ethereum or moving on. There's better networks that are out there. You know, this is what Charles Hoskinson talked about, is that, you know, Cardano competing with Ethereum. He said in one of his recent AMAs that, you know, it's like a fighter in their 20s going against somebody in their 90s. And that's kind of what it's like, right? So you've got competition with Cardano, you've got Polkadot, you have the Binance Smart Chain. How long they stick it out on Ethereum? I don't know, folks. I don't know. I'm not sure how well this Ethereum thing is going to work out in the long run. I know there's a lot of long-term hodlers of it, but the more I learn about it, the more I'm just kind of getting a little uneasy about it. So hopefully they can fix it. But in the meantime, that's where my prediction lands, 5x to 11x. You know, obviously that's including the dip today, the recent Black Friday sale. And, you know, the whole Black Friday thing, it isn't all due to Ethereum liquidations. Yes, that's a large part of it, but it's also due to Janet Yellen and her continued belief that cryptocurrency is used for nefarious purposes, which couldn't be anything further from the truth. If you want to know what's used for nefarious purposes, the regular US dollar and regular US banks, right? And then, you know, Peter Schiff baited Elon Musk into saying that he thought Ethereum and Bitcoin were a little high. So, you know, all these factors working in have brought this downturn, but that just means prices are discounted today. So if you have a good strategy around what you're doing, there's nothing at all to worry about. If anything, this is a time to buy. Remember, red means buy, green means hold or sell. Red means buy, green means hold or sell. So that's it for today's video on Uniswap. I hope you've enjoyed it. If you got any thoughts on Uniswap, feel free to leave them in the comments. Love to hear about them. As always, you can also find me on Twitter at KIR Finance is my Twitter handle. And this is Jesse with Keeping It Real, the channel that always has your back and tells it like it is. And I will see you on the next one. Later.